Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading. Welcome to our daily FX analysis video. Um, Guys, United States is closed down for Thanksgiving, so we'll do one today. Won't do one tomorrow. The reason being that markets tend to move very slowly when the US is offline, as it were. So I'll not waste my time doing one tomorrow, but I'll do one today just to kind of summarize the week. And I know I missed a couple of days at the start of the week. Well, I missed one day, second day, forgot to plug the mic in. Schoolboy error. But there you go. Let's get on with it. Yesterday, we had RB New Zealand press conference, IFO business climate in Germany. But the main thing, really, for us, durable goods orders, GDP, core PCE, price index, and then the Michigan. Always find it difficult to say that word. Michigan consumer sentiment final. Oh, and then with PCE price index year on year as well, as opposed to the core PCE and FOMC minutes. So a whole raft of information come out of the US yesterday. Now, in order to sum it up, let's just use this little article I found here. Rather than me doing the work, I found someone else has done the work. And the reason why I'm looking at this is because I've read it and it's more or less summing up what my thought processes anyway. We'll just start with crude oil. Steadied overnight after jawboning from both producers and consumers hit the wires. An advisory panel to OPEC Plus said the extra supply from various strategic stockpile reserves would bloat supply. Member states have this week said that they might reduce output if reserves were tapped. Now, this goes back to earlier in the week when, over the last few weeks, we know that Joe Biden's been putting pressure on OPEC to increase supply in order to try and control the price of fuel or slow down the rate of increase of the price of fuel. But OPEC Plus seem to have different figures or different reasons. And they're basically saying we don't see the production that we're doing at the minute to be a problem. And you don't know if these things are political or whether they're economic guys, but it's hard to get to the bottom of it. But the important thing is that sounds to me like they've got the bigger supply under the ground. The suppliers, of course, I'm talking about here, than the strategic reserves of national governments, and therefore, they could well open the taps close the taps, should I say, and to counterbalance that. So oil's going to stay where it is or go higher, guys, which is what we've been saying for a long time anyway. But that just reiterates that. Meanwhile, the US International Energy Agency accused producers of creating artificial tightness in energy markets. Okay, so there's a bit of a ding-dong going on back and forward between them. Don't see oil prices coming down anytime soon, guys. US dollar is stronger across most markets today. The plethora of US data overnight was viewed as mainly positive from the FOMC minute meetings were interpreted by the market to be quite hawkish. Now, this is leading back into what we've been saying. We're trying to trade the dollar long. Obviously, we look for setups if you're not already in. And that's going to stay the case for the next few months, I believe. The result was a flattening of the chart. Oh, yeah. Hold on. Let me get back to this. Interpreted by the market was quite hawkish. And then down here. Now, this is all about this term transitory. And this team transitory, as they're talking about here, is the Fed see the current eye-popping inflation as a supply-side issue. So the Fed, way back, remember Powell came out and he said, don't be worrying about inflation, it's transitory, we're not going to move. And then it continued to be transitory and it continued to be transitory. And then they started to cut back on the Treasury. started to taper. And now, if you go down to here, the latest was San Francisco Fed President Mary Daly. Last night, she said that she could see the pace of tapering speeding up, and Ms. Daly is considered dovish by the market. So she's dovish, but she's saying she can see the pace of tapering speeding up. So all of this points to a continued strengthening of the dollar, guys. The other side of that equation is the EU is making no efforts whatsoever to increase the value or the price of the euro. And the reason being that the EU is mainly exporting, guys. So they're trying to keep the euro low to kickstart their economy. So they're not going to do anything in a hurry to try and counter inflation there. Over and above that, they have lockdowns at the minute. It's going back in major wave in places like Austria and Germany. Germany, of course, being the engine of the European economy. So don't see the euro strengthening up anytime soon, guys. So overall, according to this article, the conclusions that we've been drawing over the last few weeks are not only correct, but should continue in the direction that we've called them in. Okay, so just a little bit of backup every now and again to the thought processes that that I have on a daily basis here, guys. And then over to today's economic calendar. GDP growth rate year-on-year final in Germany. GFK consumer confidence. Not sure what GFK is, but it's consumer confidence, guys. GDP growth rate in Mexico and ECB monetary policy meeting accounts. So we'll hear a little bit more about that when that comes out. Let's have a quick look at that. The Canadian dollar is one of a number of major currencies weakening against the dollar as the US rate hike expectations continue to ramp up. Yeah, the difficulty I have with that one, guys, is yes, it is weakening, but and we'll look at the chart in a moment, but it isn't weakening as much as many of the other currencies, so it's not necessarily the best one to trade. And with the conversation we had there about the oil price probably at least staying high, if not going higher, that will support the Canadian dollar. Although it's part of the American economy as well, but not as big a part of the American economy. Okay, so let's get on with today's charts. Overnight, we've had Swiss yen, CAD yen, Euro yen, and pound Oz alarms go off. So clearly there's been a movement on the yen, guys, in the direction that we have been expecting it. That's why the alarms have gone off. Just start on the yen index. It's a movement, guys. It's not a huge movement, but it is a movement in the direction that we've called. Remember, we're kind of targeting this area with an impulse coming down here. That looks like a 3, so it doesn't fill me with confidence of an impulse. But having said that, they don't always move the way Elliott suggests. Sometimes you don't get a 5, guys, like that before you get your pullback, and then you get sometimes you will get a 3, guys, and then a 3, but it just keeps going. Although you're always a lot more confident if you had a soft 5 in there and then a 3 back. So then you're looking for another 5 in here and a 3 back and then another 5. Although we don't count waves, we do now and again, but not religiously, guys. It's about an overall feel, an overall look at it together with our understanding of what's happening fundamentally, where we get a general trend and then use the structure to decide where to get in and out, folks. Over to the dollar. as we've been saying, continue to push up. We're in an impulse here, guys. You could look at this and potentially say of this latest run, you could potentially say that's a bit of a expanded flat. 1, 2, 3, 4, 5 doesn't quite work out because that third wave is the shortest at the moment. But as I say, we don't look at these things religiously. You go out and you look at it on, say, the 4-hour, and it's clear it's an impulse, guys. So don't think something isn't an impulse because it doesn't have the exact amount of waves that you're looking for. There are people who agonize over these things, guys, but I'm sure they don't get any better results by spending their time counting waves. Just look at it. It's an impulse. You can see there's an impulse. That's an ending diagonal. That's a little impulse back down again. You can see there's an ending diagonal. Okay, so what's next? Well, guys, I think it's going to continue up, but if you're here, or sorry, this is where we are, should I say. How do we get from there up to there or higher? Well, what I'm going to say next is that you're going to have to wait for a pullback to get into it if you're not already in it. If you're already in it and you're down there and you're a long-term player, allow it to do what it's going to do. It will end up higher than this, according to what we're reading and what we're observing. Could this now look like that? That's starting to look a bit more like a channel there. It's at the top of it. Would you be surprised if you got a correction like that? Well, to be honest, at the moment, I would be surprised. Technically, you wouldn't, but fundamentally, I would be surprised if we got a deep pullback. I think there's more upside to this. And then it'll run flat for a while, guys. It'll get to a certain level, and then it'll start to run flat. But we'll talk about that into next week. And Euro, yet again, there's more or less the same chart in reverse. Possibly that's the that could be the equivalent of. Sorry, we're looking for a target here. Is it going to come back up into 100? It's quite possible. It isn't that far away from 100, guys. Will it go above it? I doubt that, unless the rest of the world can't get their act together economically. It'll get. You see that this is supposed to be a correction of this, guys, and it's come pretty high up. And the difficulty I'm having at the moment is from a way back over here. For those of you who've been with me all of this time, when we got that, we said it would pull back. Not exactly like that, but we did say it would pull back probably into that zone. And then once we got that, we said, well, it's going to go higher because we hadn't had a correction. So we were looking for a deeper correction to push on up into 100 or thereabouts. And then we were looking for a drawdown. That was technical, guys. Of course, we didn't know way back here we were going to get a pandemic. We didn't know, exactly how this was going to go long. But anyway, we got there. And then we said, well, we'll get a 5-wave back down again, which is what we got. And from there, I said, well, we'll get a correction. It could be a flat correction. It could pull back up. But how does this now fit in to that being a correction? At the moment, I don't know, guys. It's something I'm going to have to put my mind to, because that spike over the last few weeks has kind of turned this into something else. It's starting to get bigger than a correction, if you understand what I mean. Although, if you look at a lot of impulses, well, not an impulse, if you look at a lot of diagonals, you'll often get a situation like that before you get, something like that being a diagonal, as opposed to an impulse would look more like that. But anyway, let's not dwell on that today. I will have my thinking cap on over that over the next few days, and we'll try and come up with some conclusion as to where this is going to. It's, guys, I don't think it's going to go back up to there. But it could certainly come into this zone here. Let's just draw a line in here somewhere. It could certainly come in somewhere like that. Let's just put it on 100. It could possibly get back up to 100, but I don't see it going any higher than that for the medium term. If when it's at 100 things haven't changed, then we can start, do we start to put our target there and there. But for the meantime, let's just make it 100 and see where we get to. Euro USD. And by the way, I just want to point out here, although we did talk about it a while ago, see that line there, that target, guys, that was set by, wasn't set by me. It was set by, in fact, it was in the euro. It was in here, guys. Here it is here. That target there was set by, it was either Goldman Sachs or Morgan Stanley. Can't remember which of the two it was, guys. But when we were trading down through here, remember this is on a daily time scale, they said that the euro dollar is going to go to 125. So I drew the line in and just said, well, that's what they're saying. But we'll probably run in a range between those, because over the DXY here, when we got to here, I kind of copied that and put it in there and said, we'll probably do something like that. But then when Morgan Stanley came out with that target, I put that in and said, well, once this is over, we'll maybe get that. But amazingly, Morgan Stanley's come out 2 weeks ago, and we did mention it a couple of weeks ago, and said they got it wrong. Now, so what does that do for you? Well, it shows you guys that these experts, not saying they get it wrong all the time, but they do get it wrong. So we have to do our own work and believe in our own analysis, guys, because there's been plenty of times over the years where the so-called big boys have come out with targets that have not been what I've seen, but you kind of, the tendency is, well, these are the guys that are the experts. The next thing you know, they've got it wrong. Okay. Pound USD. I think this will continue to drop, folks, but not necessarily the best trade, because we are looking for a bit of strength in the pound. It has broken that bottom. It is pushing down. I was saying that the possibility to run flat. It can still run flat, guys. We're still waiting for the market to react. We're still waiting for the Bank of England to confirm that they're going to increase interest rates in the UK, which would stall this drop, guys, I imagine. Therefore, it's not going to necessarily be the best trade. This is continuing down, as we said it would. But yet again, guys, the reason we draw these isn't because we're saying trade that. We're just saying you got to look for a set. If you're not in it, you got to look for some sort of setup in order to get in it. And it'll not necessarily give it to you. This could just continue to push on down into this area, which might be the equivalent of DXY going to 100. I'll work that out over the weekend. I'll put some targets in here over the weekend, guys. I've been a little bit slip-slop about this recently. Same with this. It's continuing short, guys. At some point, you'll get a reaction. Just as we're looking for a pullback in DXY in order to get into it, you would then see a pullback here, which possibly you then trade down, guys. We'll have to wait and see if we get it first, and then we'll decide whether we're going to trade it or not. And of course, if you're in the trade, then I wouldn't panic. Move your stops in case it comes back down. If it doesn't, then just keep the price continues to go up. This is the CAD, but yet again, this wouldn't be my favorite trade because of the price of oil, the strength of oil, and I think oil is going to continue to stay strong, at least high, probably a better word for it, guys. And therefore, this could potentially run flat for a while, guys. So I'm not that keen on that. Doesn't mean it can't continue to go up, guys. But when you're choosing which of the pairs to trade, then don't choose the ones that have reasons for their underlying or their the other side of the equation to be strong as well. As I used to draw all of the time, you're looking for strong against weak, guys, and therefore there's your gap. If you're trading strong against strong or long against long, then there's your gap. So you're really looking for that in the ideal world. Sometimes you'll get a currency that's running flat and some that's running strong, and then you're trading that. But in the ideal world, you're looking for something that's going long to trade against something that's going short, guys. So that doesn't mean to say that the CAD won't continue to, US CAD won't continue to go up. It just means that there's a higher probability of some of the other ones going that. For example, the Swedish, we're on 1 hour here, guys. Let's zoom in a little bit. Yet again, that's a nice impulse, guys. You're maybe looking for something there for it to go long again. I don't like getting involved once something's gone. The ideal place to get involved in this would have been down here somewhere, and then a bit more risk. Excuse me, folks. A bit more risky getting involved there, but certainly up here, unless you get a half decent pullback, I wouldn't be getting involved in this. US yen. Remember, guys, yet we're saying the dollar's going to keep going long, but it will go long in a sawtooth manner, and so you got to wait for your sawtooth. You got to wait for the pullback. It's not necessarily going to give us a pullback, but if you don't wait for pullbacks in your trading strategy, and you do it all of the time, you keep just pushing long all of the time, then you're going to get it wrong an awful lot of time, guys. There's some sort of structure coming in here. Not sure. If it did that, you'd certainly be looking to do that, but I don't know that it's going to do that. We're still on 1 hour here, guys. Looking for more weakness from the yen and more strength from the dollar. So it should go in that direction, but it's whether you get a setup or not, guys. Same with this little beauty. Now, one of the things I'm aware of here, just be careful of situations like that. Doesn't mean it won't break out through it, guys, but often you'll get a reaction off that level before you get a push up. Gold, even with all the fears of, listen, gold's still quite high, guys. I mean, it's 1790, but what we're looking for is, are we going to get more movement in the long direction? Because we've had this massive correction since the end of the end of the beginning of the pandemic. Okay, I was going to say that doesn't look like much of a drawdown. That's the overall price. That's down to zero, guys. So it's come down. See, I put that in zero. So it's come off approximately 19-20% at its lowest point on the overall price. But if we were to actually fib that on the impulse, which probably take from there, guys. Then it came down 40%, maybe just a little bit over 40%, and it's currently down about 30%, I would say. Doesn't look to me like it's really keen to break out of this structure. At some point it will. It may well have more downside to it in the meantime, guys. So I'm not overly enthusiastic with gold. I did get into it as a hedge probably 5-6 months ago, and with hindsight, I get in too soon. And the same will apply to silver. We had the impulse. We got a bit of a double top with it. So it's running flat as opposed to down in a zigzag. The way gold is, gold's a bit of a zigzag. It's running flat, so it's kind of holding its price up there, guys. Now, I haven't read any articles about gold or silver recently, so I'm still running on old news, as it were. But the biggest thing that's holding back the price, as I can see, is, well, firstly, at the moment, stocks still seem to be the place to be, although if we get a continuation of this drawdown that we've been in for a week or so, then you could start to see some more money come out of the market. And over and above that, people are dabbling in crypto. When I say people, I mean institutions are now dabbling in crypto. So some of the money that may have gone into gold will be going into crypto. The thing is with these account managers, guys, they can't be seen to be missing the boat. And if everyone else is getting into something and they don't get into it, and they miss the boat with it, then they could lose their jobs quite easily. Bitcoin on a bit of a pullback this last week or so, but I'm looking for the next leg up in that, guys. Looks a bit, I think I said the other day, it looks a little bit like an expanded flat, guys, which means from here it could start to push long. I don't know the fundamental reason why that would happen, but if that structure is correct, there's 5 waves in there. That's a little bit truncated, possibly. Now, it doesn't mean that there isn't a bit more downside to this wave, so it could start going long from there. But if that's correct, because that's an A, that's a B, and this is more of an impulsive move here, guys. So it just looks like an ABC to me, which means that there could be upside from there. Now, I don't trade Bitcoin itself anymore. I'm taking a bit more of a flyer at some of the alternate cryptocurrencies that are out there. Basically because they could quadruple or triple their value over the next few years, whereas Bitcoin, some people say it could go to 1 million, but I don't know that it could necessarily do that. Although I did say that one is at 20,000. I don't know that it could get to 60, but it did. And Ethereum, more or less the same thing. Structure's different, guys. Sorry, we're on the same time scale there. So we're running from October. Oh no. September, October. Let's take this out to 4 hours, guys, and clean it up and then put Bitcoin over the top of it, just so we can see if there's any correlation between them. Where do we do that? Oh yeah, compare. You think I hadn't used these BTC, isn't it? USD, is it? Must be USD. Choose this one. These are sometimes difficult to get to line up, guys. There's that little correction I'm talking about there. There has to be a way. Yeah, I'm really trying to zoom in on this. Let's see if we can zoom in on it. No. All right, guys, that's a bit of a... There must be a way of getting these to work nicely, folks. Change the time scale down to 1 hour, see if that helps. Sorry, I'm just wasting your time here, guys. Okay, let's... yeah, I assume that's it there. Where with Bitcoin, it looks like it's done what did we say, an A, B, C. This is, yeah, it's probably there, and there. This is dropped down. I suspect this will go long from here, folks. Oil, very, very technical. That whole exercise was very technical, guys. Oil on the 1 hour time scale. Given what's been saying, let's go back out to say 4 hours. And what I was saying there is that's supposed to be a cross. It's not going down there, guys. There isn't any way that the release of strategic supplies could bring it down that far. So it'll either run flat within here. I don't even see it doing that, but let's give it it'll either run flat within there, guys, or it'll push up to there, and it could push up to there from here. But with the, it depends what OPEC do, guys. The important thing for it is I don't trade this particular commodity. What I do is get a clue about what's going to happen to the likes of the CAD or the Norwegian krona. And while this is high, it's going to support those two economies, folks, among others. But of the currencies that we potentially trade. So oil's not going anywhere, guys. It's certainly not going down there. EuroCAD, let's just start to push through this a little bit, guys. With the continued weakness of the euro and possible strengthening of the CAD, I think this will continue to drop, but it's not necessarily something I want to trade. We're looking for a drop here. We're on 4 hours. We're looking for a drop there. Euro New Zealand, this is pushing off in the opposite direction, which is quite surprising. But what that's saying to me is that whatever was said over here, and remember, I'm always asleep when this goes on. Whatever was said in there, the market hasn't liked, so that's pushed off in the wrong direction, which isn't necessarily good for me because I am short New Zealand yen. Euro yen. Now, as we said, the dollar yen over the last lot of weeks and months would have been the better trade. But given that there's not necessarily any great setups on the dollar trades, potentially there's more upside to this, guys. Euro Swiss, potentially there's something there, but we're going to have to wait for a news article or something to get it going. Pound CAD, let's zoom in a little bit on these, folks. It's come lower and lower and lower, so anyone that got in before it broke out, you're just going to be in a lot of pain at the minute. But I wouldn't panic about it. Pound Oz running flat on the 4 hours. I do think it'll break out, but I'm not going to jump in there. Pound New Zealand, well, it's gone. So obviously the Aussie New Zealand will be going long. So really what you're looking for here would be some sort of setup, get into it. Pound Swiss, potential. Pound Euro, potential. Pound Yen, potentially long. This is all depending on the Bank of England guys increasing interest rates. This is one that I'm in. It's running flat for me, but I'm looking for a move up there. I don't know why I made that so small. I must have moved that when we were on the 4 hours. We were looking for this, guys. What were we looking for here? Well, at least to come back to, we're looking for a 5-wave impulse. Although it's almost a diagonal. Can't remember where we had that, guys. Did we have it up there or something? Anyway, I'm long on that. I'm looking for that to go long. Aussie, look at that. Aussie, New Zealand. Although I will admit, I didn't know that was going to go in that direction. But there we go. So yet again, look for a possible setup. Aussie, Swiss. Let's see if it breaks out or starts to come long. If it starts to come long, then potential. Aussie CAD, don't know. Swiss yen, I'm looking for that to break out and go long, but it's still in this structure. You'd like to see an impulse and then a correction. CAD Swiss. It's not obvious for me at the minute. CAD yen, potential push up there. New Zealand. There's the way we're looking at that. That Aussie one got mixed up. This is the other one that I'm in, but it's moving in the wrong direction for me, guys. So I don't know whether I'll maybe just get out of it and look for a better, wait for it to start to turn and get into it. It just looks so promising when you see something like that. Though we do know that these can run and run and run and run. But New Zealand CAD. Yeah. When we were here, the last time I spoke about this, guys, I said we're in the middle of the range. So it'll either drop down to the bottom of the range or it'll go long. And because we didn't know which it would do, we just said leave it alone. So it's dropped into the bottom of the range now. Would you bet against it bouncing back up again and staying in there? Or is this the point at which it says, right, we're away? I'll have a think about those over the weekend. New Zealand Swiss. Yet again, this is one that I was looking to go long on. This third wave or fourth wave might be having an influence on the New Zealand currency, guys. Because after the third wave, we're kind of looking at New Zealand opening up and getting its tourism going again. And then commodity prices have been dropping recently as well. So that's what's putting this under pressure. But yet again, look at how it's been moving. So because it's moving in that direction doesn't mean it's going to keep moving in that direction. There should be a reaction at some point and it'll come back up. But that's for another day. What's DE? Oh, John Deere. Yeah, I was looking at that the other day. That's in the wrong place. Okay, guys, that'll do for the day. Nothing overly conclusive there, other than on the longer time scale. On the higher time scale, we're looking at the dollar going long, possibly the pound going long, once the Bank of England signals that it's going to increase interest rates, euro going short, and possibly the yen continuing short. And then it's about mixing and matching those guys and trying to find a trade. Okay, that'll do for the day. It'll do for the weekend, guys. I'll see you all again on Monday. Obviously, it's not Thanksgiving over here, so I'll be working away over the weekend and trying to get myself back up to speed after the long break that I took earlier in the year. Okay, that'll do for now, guys. Bye for now.